In this video, we are going to be analysing Coinbase. We have seen they just had their earnings. They had an earnings per share of minus $2.43 per share, well, $2.43 per share, and we are down 8% on that news coming into the close. So what are going to be our key levels from here? If we continue down, we have our closest statistical level. This is statistical mean at $35. Again, this level and how we use statistical mean, this is where we expect the stock to trade to. We don't tend to trade off this level, just to it. And the reason we don't tend to trade off it is because this is where we expect stock to reverse to. Once it's there, it is considered much more of a fair value. So looking to buy or short at this level can be a bit risky if you're a trader, because again, direction is unclear. If you're buying at statistical mean as an investment, then that's usually a better idea. Again, you're getting in at fair value. If it continues to dip, it's getting discounted, and if you want, you can buy more, but there's also a good chance that we push up from that level. So that's going to be that key level that would also be below that 52-week low of $40 or $40.83. So if it was something you were looking to get long at, could be looking at some good upside, especially depending on your view. I personally thought Coinbase very overvalued in that $300 range, but if you weren't so, if you didn't think it was very overbought, you think we'll get back to there, when this poor market conditions kind of recover, then I mean there is a lot of upside. You have nearly 1,000% upside trading something like Coin. So again, depending on your outlook, at least on the longer term outlook, could be a great buying opportunity. If you're not a massive crypto fan, a bit like myself, I am not a massive fan of crypto. I might trade the occasional Bitcoin and Ethereum, not something I really look to hold long term. But again, that's always going to be down to your preference, and whatever it is, that could be a good opportunity for you. But again, more into the trading perspective, that's where we'd be looking to hold short to. I would be a bit more careful holding a short to pass $35. But if you wanted one more level, the only one we have going lower is at around $6. That is going to be our statistical mean on the 1 year chart as well. What I want to quickly do though is cut down just to a shorter term time frame, just to give you some levels as a support if you are looking to trade close to the level where we are, and that's going to be $51. And I don't think there's going to be any levels on the 20-day. Okay, there's actually one level on the 20-day as well. So if you're looking just for closer supports to where we are now, we do have supports at $49.50 and $51.50, as those would be from the 20 and 30-day charts. Now though, on to quickly to provide you some resistances, we do have one at $81, going higher would be $95, $130, and really those would be the key levels, because unlikely that we push past those in current market conditions. I mean, we have just had the FOMC and kind of the Fed come out and say, well, I mean, they did do the expected 75 basis point increase. The statement came out that was actually quite dovish, but then their conference came out and that was very hawkish. So anything like crypto, well, really the whole market as a whole, stock indices, the stock market as a whole will always go, or tend to go back down on hawkish news, because obviously stocks grow. They tend to use debt to do this. So when interest rates are higher, it only limits their growth. So that's why you saw the overall market sink yesterday. And again, there was the conference is usually the key thing, and that's what happened yesterday, and that was a hawkish event, so not good for stocks, at least looking near it to the near term. So do be watching out for that, and again, have a plan whether you're trading or investing in this. What are you looking for? Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these two analysis videos.